Hi, welcome to this video today. What we're going to be looking at is one of the great traders, Bruce Kovner, and in particular an interview in the book Market Wizards with Jack Schwager. And yeah, Schwager at the time was interviewing all the great traders. I remember reading the book back in the 90s. It was the interview with Kovner that I really liked, actually, and I learned a lot from that interview. And I think some of the tips and advice he gives are great, actually. I'm just going to go through them in this video. And one of the things he was saying, first of all, when he was being interviewed, was that too many traders are just technical or fundamental. He liked to be technical, but he also liked to look at the fundamentals and the market sentiment behind the chart. He was making a key point that charts don't predict anything; they just tell you what happened in the past and give you an idea of value. But if you really want to know where a market might be going, you need to look at the fundamentals and the sentiment behind the chart. And I firmly believe that if you know the sentiment, you'll do a lot better than if you just purely look at a chart. And he was making the point that obviously you need to work out how bullish the market is on currency pair or how bearish, and then look to trade in a contrary fashion. And I think with trading, and he makes a key point with this, the more unexpected an event is, the more likely it is to follow through. Okay, and by an unexpected event, I mean, let's say you get a breakout that just seems to appear for no reason, no one is expecting it. That is probably going to be a good one. If there's a breakout that occurs which the whole market is looking for, then it's probably not going to be a good one, because of course all those traders are going to try and get in at once. The buying or selling power will quickly get exhausted, and you get a fake out. So he's saying the more, the less closely observed a market is, the better it is to trade. And he was making a key point with cross rates. They offer some of the best, trends and trading signals because they're less closely observed by speculators. There's less speculative interest. And I always think that traders focus too much on the majors. Majors very often don't offer good opportunities, yet there's good opportunities in the cross rates. So look at the crosses as well as the majors. And in terms of sentiment, I do think that the problem you've got today is that most traders are just purely technical. And this causes a problem because everyone's trying to come in and out at the same levels. And you get caught by the volatility and the noise of the markets. Okay, he made a key point in dealing with this was that he puts his stop loss far away, so it's quite hard to reach. Although I think those were the words he used. What he was doing effectively was putting his stop where he thought he would be proved wrong on the trade, and then basically it'd be quite wide, but he would have quite small position size. And he was making the point it's the opposite to what most traders do. Most traders have close stops and then they have big position size. When in Forex markets, you can't trade with close stops. They need to be a reasonable distance away. And he was making the point that most traders are probably 3 to 5 times geared up more than they should be. I'd say it's probably more than, most traders are 10 times more geared than they should be. So you say just cut back your size so you can have a reasonable stop loss. And I think traders want to over leverage, and you don't make money over leveraging and having tight stops. You've got to have a stop, reasonable distance, and basically keep your leverage at kind of manageable levels. He was also making the point that in terms of trading, the best traders are the disciplined traders. He said one of the key traits for success is discipline under pressure, which it is, and basically tight money management. And he added another thing into the mix, is basically see the future in a different way to other traders. So it's those traders who can look ahead and see, or postulate what the market might do, rather than basically looking at the obvious. And that goes with when you've got a bullish or bearish extreme, it doesn't take much to break it. You've got to think beyond the obvious, and if you do that, then you'll be a great trader. And his interview really, I think, main points for me is, mix those fundamentals and technicals together. Basically cut your position size. Don't over leverage. Always maintain, tight discipline. Trade a wide variety of contracts. Don't just restrict yourself to the majors. And always try and think in a different way to other traders. So if everyone is thinking things can go one way, think what possibly might turn that scenario around. So I enjoyed the interview with Kovner, and I'm sure that if you haven't read the book Market Wizards, you'll enjoy that interview with him and all the other great traders. So thank you very much for watching me today. Take care and have a good day.